Bitcoin, gold, the US dollar, S&P 500, UK 100, whatever it is that you want to talk about, always have one big thing, and it has its secret. And the secret is all of the big banks and institutions in the background that are all the smart money. And if you want to make money in any of these indices, in any of these stocks or any of these assets, you've got to follow the smart money. And you can't be the dumb money that is fueling all of the profits for this smart money. So in this video, I'm going to try and tell you how I try to avoid being the dumb money, and how I try and work out where the smart money is putting their money in and where they are taking the profits out from the dumb money. The dumb money is simply just fueling the smart money's profits. Okay, with that said, my name's David Thorne. I am not a financial advisor. I am not a professional trader. I am literally just a guy sat with a microphone, looking at a screen, talking about green and red candles going up and down, and learning about how I can best invest my money into Bitcoin at the right times and get it out with profits at the right times too. So if you're interested in listening to what I've got to say about my portfolio and so on, about my money, then please feel free to continue listening. If you want technical analysis, if you want all information about how this, that, and the other is going to work, then there's plenty of other videos elsewhere. However, I do pretty well by myself, and I do understand these things quite well. So if you want to listen, please join the ride right now. With that said, let's get straight into it. As we can see here, we've got the Bitcoin US dollar on a monthly scale, right? So each candle is a monthly scale, and you can see here if you were to go into a car dealership and you were just looking at this based upon the prices of when's best to buy a car, you would see right now that the cars are all overpriced, and you're thinking, oh, I don't need the car today. I need the car for the next 10 years. We've got 24 here. I need the car for the next 10 years. So really, I want to pay as little as possible. I want to pay as little as possible, but I don't need it today. I just need to know that I've got a car in the future. So you've seen here, oh, wait a minute, it goes up for a little bit and then it comes down a little bit, then it goes up. So any logical person right now investing 20, 30, 40, $50,000, pounds, euros into a car, if they could wait, if they were able to wait just a little bit, they would see this and think, logically speaking, the price of the cars are super overpriced right now. Let's just wait another month to see whether the price comes down again. And then they see, oh, it's leveling out. This euphoria of the prices is leveling out, and these increases in price are going down and down and down until one point they get to like nearly just on the same thing. And this is the market saying, hey, this has gone too far now, and then no one wants to buy the cars anymore. So the dealerships and the manufacturers, they have to reduce their prices to entice people back in. And before you know it, people are selling their cars that they just bought at a profit because they know that it's going down. And then suddenly you get these people that go, all right, I'm going to buy now. The patient people, the smart people that decided, well, that's not the smart people. The smart people, this is the patient people, right? The smart people are the ones that bought down here, right? And so this is where you've got to think, where is the smart money buying? Where has the smart money bought Bitcoin? And where are they going to sell? And why are they going to sell? So we're looking at a very, very macro level right now. But if you're looking at investing your money for 10, 20, 30 years, it doesn't matter if you wait 3 months right now. There are signs right now. There are people saying recession is coming, or recession is here, or a technical recession. And they are saying everything is overpriced, bubbles, houses are too high. This is all just what the media has been saying already, that the interest rates are too high. There's people can't afford this, they can't afford that, and governments are having to add extra allowances to people, etc., etc. So you're hearing all of these things that are saying that some people don't have money. And well, we want to hear the opposite. We want to hear, oh, the world's booming, everyone's got loads of money, we're spending loads of money, we're buying new Ferraris and getting new houses and this, that, and the other, and the house prices are super cheap by now. This is the type of stuff you want to be hearing when to get into this, because it means that that stuff is not got any value because there's so much competition right now. People are just buying into this, right? They're just buying into this and forcing the price up. It's euphoria. There was some form of realistic, logical increase in price here, right? And then it had a little bit less logical increase here, and then boom, just got euphoria here. And the question is, do you want to buy into this market with euphoria? So let's look at the weekly pattern now. And you see here, this directly straight up candles. This is pure euphoria. Euphoria does not have any logic, reasoning, or rationality in it whatsoever. And this is not trading. This is nothing more than people jumping on the bandwagon, hoping it's going to go to 100,000 to make all of their money, right? To then have the rug pulled out on their feet and it dumped down quicker than a quick thing on a quick day, right? And they lose all of their money and they go in the corner and they start crying because their life savings have been put into this with the hopes that it goes to 100,000. Get real, right? Get logical, get rational. It may go to 100,000, but it's not going to go there overnight and you're not going to get rich quick. All right. If you want to get rich quick, go to the casino and put your money on red, right? And keep doing it until you've lost all your money. That's the easiest way to get rich. Okay. Because at one point you're going to win. And if you've got the staying power to walk away, right, with that money, you've done well. But there's also a 50% chance that you're going to lose all your money as well. And that's exactly the same right here. This is red, this is black. If it goes the opposite direction, your money's just going to decrease and decrease and decrease. And if you put margin on this, that, and the other, it's going to go down even quicker. And the smart money is going to take your money. The smart money, how is the smart money going to take your money? Well, they see all these people buying with euphoria. And if someone is buying, right? If someone wants to buy, that means someone else has got to sell. So if everyone is buying, if everyone is euphoric up here and they're all buying, who is selling? Who is selling? This is what you've got to think about it. Why are these people selling if the price is going to go to 100,000? Why? There's no logic in that they're selling something that's going to go to 100,000. Or is it because they bought it at 15,000 and they've now made so many hundreds of % profit and they're selling it to you and they know that they can buy it back from you at a 50% discount in the coming months or in the coming year? Because these guys, they don't have a calendar. They are literally just, we'll invest it, and when we can get it out at a profit, we will. And that's all it is. It's just a number on a sheet and say, when it's got the right amount of profit, we'll take it out. They've got patience galore, all right? And they don't have emotions because they're just looking at when's the right time to put it in and when's the right time to put it out. Euphoria is not on their checklist. Okay, they are. Is there profit there or is there no profit there? No profit, don't go in. When there's profit, get it out. And this is exactly how they work. So you've got to think like smart money, right? You've got to think in the opposite direction. Big green candles means selling, right? Because that's what the institutions, the banks, the big hedge fund managers are doing here. They are selling what they bought down here to you. And they are taking every single order, they're giving it to you. Huge volume here means sell. Everyone's going, I want to buy. And the hedge fund managers are saying, or the banks are saying, I'll sell to you constantly, all the time. Until all of the euphoria runs out and the banks go, okay, no one's wanting to buy anymore, right? Let's just slow it down. And that's where the volatility comes in up here, right? So you've got to think like the smart money. Big red candles, these are all of the banks selling, right? This is all of the banks selling up here, pushing the price back down again. And who is on the other side of this trade? It's the retail traders buying with the hopes and dreams it's going to go to 100,000. The red candles is them selling, and the likelihood is they sold over here, right? They sold over here, and this was just extra profits, and so on. And then they just did the final amount here just to make it dump to go down. And then they bought it all back here. What's that? 64 They bought it all back here at a 50% discount, and then they just run the price back up again and did it again at an even bigger discount, or they made even more money up here. Follow the smart money. Don't be the dumb money. Look, we're still looking on a weekly basis here right now. If you're investing long term, that's the type of time frames you need to be looking at. Daily candle here. Look, here's the smart money down here. Right? And here's the dumb money up here, all buying the smart money's profits, right? Because they're selling it up here at a humongous profit. Don't be the dumb money. Don't be the dumb money and buy up here. You want to be selling up here, which means you're going to need some patience to wait for this correction to come down where the smart money says, I'm going to sell now, and I'm going to take profits. At the moment, they're not taking profits. They might taking small profits, but they might have sold a little bit here, right? And then it went back up again and then sold more here. They could have bought a little bit more here and then just sold it again here to bring the price back up again. So I can't say this more often. Don't be the dumb money. If someone is selling something, someone's got to buy something. If someone wants to buy something, someone's got to sell it, right? And you have to be thinking, how much profit is that person making from you buying it off of them? If you go into a car dealership and there were cars that were sold there for $10,000 a week before, and now the car is $30,000, the likelihood is they are making $20,000 profit from you just because you're an idiot, right? And literally the second they walk away, they are laughing and they're taking that 20 grand and going and buy 2 more cars with it at 10 grand each to sell again to another bunch of idiots that are going to come in and buy it for 31,000 because they just heard someone else bought it for 30 and the price is going up and they're going to sell it in the future for 100K. Nothing's worth that much money. It's all relative to how much gold is worth, how much US dollars worth, how much silver's worth, how much a loaf of bread is worth, how much a pint of milk is worth. If you can buy a loaf of bread today for $1 or €1, right? Bitcoin's not worth 100K. If in 12 months the loaf of bread cost €1.30 or $1.30, expect for Bitcoin price to go up 30%, right? If the fuel prices go up by 30%, expect Bitcoin prices to go up by 30% because it's moving itself towards inflation, right? If the dollar is worth 30% less, that means this is going to be worth 30% more because the banks are hedging against all of that, right? That's the smart money once again. They know that the dollar is debasing, so they're putting money into this. But at one point, when they've made so much money over the year that they can take profits, right? And they know that they've made more money than inflation, they want to take that money out again to wait for the market to cool off and come down so they can buy everything back at a cheaper price and then start again for next year, all right? It's only March right now. These banks will be taking their profits from last year right now and trying to find their positions ready for next year. They're long term. Don't be short term. Don't be so short-sighted. If you want to look at the market at 1 minute, feel free to look at the market 1 minute. You're going to get exactly the same thing. Look, buy low, sell high. Buy again, sell again. Wait for it to correct, buy it again. And it's going to go up. That pattern just repeats and repeats and repeats. It's called economics. Economics 101. Buy low, sell high. Nothing in that statement there said buy high, sell low. You will be at a negative, right? If you sell low and buy high, you will never make any money. That's not how it works. The media is wanting you to buy high, right? Because those billionaires, those people, those institutions, they only have to invest a couple of million in the media to say all the right things. And this is not a conspiracy theory. This, if you've got enough money to market your idea, you'll make people buy something that's not worth that. That's called marketing. That's called advertising. That's called market manipulation. And that's exactly what happens in the media, the TV, the radio, the internet, everything. They pump the price up so everyone thinks it's worth more. There's shoes worth $100,000. There's all sorts of things. Barbie dolls worth 100,000 because some superstar has bought it and probably got paid to advertise with it. And it was so this is what you've got to understand. Is be the smart money and buy when the prices are down and sell when they're high. Don't be the opposite. Do not get trapped by the euphoria. It's a trap, and it was set by the smart money. Right? I'm going to say this once again. The trap was set by the smart money a long time ago. They knew they want to get the price there. It took them 6 months to get it there. Or it didn't take them 6 months. It took September. It did take them 6 months to get there, right? But they knew over 6 months they'll take all their profits out for the year or for last year, and then they're done. With that said, I hope you got something out of this video, and it should be follow the smart money, don't follow the dumb money, right? When the dumb money's buying, you should be selling. When the smart money's buying, you should be buying, right? So when the dumb money's buying, you should be selling, right? When the smart money is buying, you should be buying. And when the dumb money is selling, you should be buying, okay? That's exactly how it works. It's not the other way around. Do not be caught out in the euphoria right now, because that is exactly what everyone wants you to be doing. They want you to be in the euphoria, buying and giving your money to the profits. It is nothing more than the last person standing when the music stops. Someone has got to take the debt. Someone has got to take that hit. And if institutions are passing their money all the way around all the time back to each other, pushing that price up, when the institutions want to get out, they don't want to be the last person standing, right? Because they're the one going to take all the debt. So what do they need? They need retail traders to come in to take all of that debt, right? And at the moment, there's no retail traders coming in. So they're passing this bucks backwards and forwards to each other. Search on Google Trends. The retail trade is not in right now. This is nothing more than speculation pushing this price up to get retail traders in. But they've already been stung. Retail has already been stung a whole bunch of times. So they're going to be very cautious about coming in again, right? There's no pandemic here right now. And so there's nothing. We need a black swan event to make this go down. Or they need the retail to come in to push this up. So the price will go up. That's without question. And I've got trades in ready to sell at higher levels when it does go up again. But I've also got trades in for other Bitcoin I've already sold at the top, and I'm buying it back again at the middle. Right, so I make profits on it. I'm following the smart money. With that said, I'm done with this video now. I hope you've learned something, and thank you very much for all the support that you've given the last videos. It's super awesome. And please don't forget to like, subscribe, and give me your ideas down in the video below. Remember, I'm not a professional trader. I am not a financial advisor. I'm just a person sat here looking at green candles on it, but I do understand economics, right? I do understand it because you can do courses on economics, you can buy books on economics, and it is not rocket science. Okay, that's why they call it economics, and rocket science is rocket science, because it's all about mathematics and how people and when people buy and sell stuff. With that said, thanks very much. Ciao, goodbye.